Hey everybody, thank you so much for watching and checking the channel out. My name is Agabus and this is your financial education channel. This week, the Federal Reserve, the central bank of the United States, decided to pause their rate hiking cycle. The current rates are paused between 5.25% and 5.5%. And according to the Jerome Powell's interview, there are some who are saying that interest rates will have to remain higher for longer. We'll read some of the news. I'll give you my 2 cents at the end of it. The first article here is from Yahoo Finance. It says interest rates are staying higher for longer, means at least through 2026 for the Fed. Yikes. Let's take a look and see what the article has to say. It says a common refrain around the Federal Reserve in recent months has been the notion that interest rates remain higher for longer, meaning that even after the central bank ends its current rate hiking cycle and begins the process of bringing rates down, interest rates will remain higher than what the Fed thinks would be needed to sustain economic growth with inflation at 2%. What exactly longer entails is at the heart of investor debates about the Fed's policy. But on Wednesday, the central bank offered further outlines of this answer. At least 3 more years. What the Federal Reserve comes out with is this dot plot that they reference here. The current rate is at a 22-year high, and you can see the difference between their last meeting in June and September meeting just happening this week. Now, this dot plot is coordinated between 19 different people on the committee, and you can see their expectations of where they think interest rates will have to be. In 2024, you'll notice here between the blue and the purple that more often these people are thinking interest rates will need to stay a bit higher. And then 2025, there's a pretty significant cutoff. And the longer run, we go back into that 2%-ish rate, interest rate cycle. Now, what the Fed Reserve will send out in their public comments is a lot different than what the street or the market decides or thinks will happen as well. And it's always fun to see what the Federal Reserve's predictions are versus other Fed Watch tools that are out there. The article continues that since the forecasts in June, the central bank took away 0.5% worth of rate cuts in 2024 and another half in 2025, suggesting rates would end by 2026, as we noted in the dot plot above. Jerome Powell says it's a culmination of individual forecasts, referring to the dot plot, of 19 people, and then what you're seeing are the medians. So I wouldn't want to bestow upon the plot the idea that it's really a plan, more of suggestions, it sounds like. Now, if we go to the CME Group's Watch Tool, which is a pretty good indicator of what the expectations are for the Fed to do, you'll notice that in November here, you'll notice that in November here, the next meeting, the probability of a rate hike is at a 26% chance that it'll jump to 550 to 575. It's not until a few more meetings here, actually in March of next year, that you even start to see some probabilities creep up of this rate drop. Time will tell what they end up doing, but I would argue that they're going to have to start dropping rates sometime next year. Number one, because it's a political election season, and every politician, both sides of the fence, are going to want to try to get reelected in a better economy. And number two, there is a trillion and trillions of government debt that's going to mature in the next 12 months that needs to be paid back. The government doesn't have this money, or what will most likely happen is that this money will be refinanced at a newer, higher interest rate, which will add to the debt and add to the servicing arm of where the government payments go. I would suspect that interest rates do start coming down sooner, because if interest rates are too high for too long, not only do they run the risk of destroying the economy and the consumer demand, but they run the risk of jacking up interest payments on the debt to a much higher, more unsustainable rate, which current debt is already unsustainable. So at this point, it's kind of joking about what these numbers really mean. But we shall see what the rates end up doing. Tell me in the comment section below what you think rates will come out to be in the next few months. When do you think the rate cut finally comes? Does it come before March of 2024, Would love to hear your thoughts. Thank you so much for watching. My name is Agabus. This is your financial channel. Make sure to stay inquisitive, stay informed, and stay subscribed. And we will see you tomorrow.